This is our Forex blog for October 21st, 2013, and these are our currency indexes, which at a glance let you see what each individual currency is doing, such as the dollar. It starts the day off trending up. This is the hourly moving average, and as you can see, it's pretty much spending the majority of its time above the hourly moving average. That tends to lead to an uptrend. You can see the previous day's high, which frequently acts as a resistance area. Previous day's low acts as support, and once it breaks it, it tends to trend down for a while, sometimes for multiple hours, in this case only for about an hour, but it was a significant move down that you could have sold the yen here. And so basically, in a nutshell, what you want to do is focus on buying the strong currencies versus the weak. If the strong currency like the euro is on top and the weak currency is on the bottom. So let's bring up a euro yen chart here, and we'll just highlight that as an example of what to look for to buy. We have a strong euro, weak yen, and so therefore the euro yen is going to go up. Here's the euro yen, and as you can see, it trends up, pulls back, trends up, pulls back, trends up, and basically in a nutshell, we're looking to find two different types of patterns for trades. An up move where the high is higher than the previous high and a little pullback. That's one pattern that we look for. This is kind of a secondary pattern, a little wedge pattern. You get this pullback right here, you'd have a loss. You buy this pullback right here, it went up. Buy the pullback right here, it went up. Buy the pullback right here, it went up. And typically we use range charts to get into these trades. But when one currency is strong and the other one's weak, you focus on buying the strong versus the weak. It's that simple. And when you have a currency like the pound that was trending up, pull back, usually you get a bounce off the hourly, like you can see in the dollar. Right here, it went a little bit below it right there. The euro went up, pulled back, found support, went up, broke it here, unfortunately. Most times when price breaks from below to above or above to below the hourly, you're going to get a trend in the opposite direction. So let's line these up when the pound broke down right here. Pound was strong. It never hit the upper band, so it wasn't really extremely strong. Pull back to the hourly, got no bounce off of it. It's going sideways here for about 2.5 hours. You want to find a currency that's strong to buy it against. It wouldn't be the yen. The dollar's strong, and so when the pound breaks down at a little bit after 7, you want to sell the pound dollar. This is a high probability, very likely to work trade. And what's nice about this is you can see the pound dollar is in a very choppy sideways range of about 15 pips. And when it breaks down, you can see it, even though today was a relatively dull day, it fell about 10, 20, 25 pips. Put your stop right above the highs of where it was consolidating. If you're a little bit more longer term trader, you put it up here. But the point is, most times, even on dull days like today, you're never going to catch every pip, so let's assume you make a little bit less than that. You made 2.5 times what your risk is. And that's the key to trading. When the market's really ripping and roaring, you'll frequently find 30 to 50 pip moves, but on dull days like today, 15, 20, 25 pip win while risking 6 to 8 pips is a good deal. Here's some other currencies: the Australian, Swiss, CAD, New Zealand. You can see that the Australian was trending up. In fact, it was strong enough to go above the previous day's high. Pulled back, found support here at the hourly, which, like I said, frequently happens. When you got a currency that's trending up, especially showing signs of strength by going over the previous high of the last swing, which in this case happens to be the previous day's previous day's high. That's a very bullish thing to be looking for buys. And so when the pound got weak and the Australian strong, it's very likely to sell the pound Australian at that time. What was this time? Around, I guess, 7 or so. Now the Australian was already strong, but at 7 o'clock we're looking for a sell. Now keep in mind today's kind of a dead day. This has already been going down kind of sideways. You have a nice little rectangle wedge pattern right here, and it broke down. And whether you got out of the trade with a very small profit or it didn't, if your stop's above the high here, you have many hours to make a little bit of money on this, and it never really stopped you out. If you would have anytime someone's in a trade and it's not working out after an hour or two, you really got to bail in the trade, whether it's a break even or you make 2 to 5 pips or 10 pips or 12 pips max, whatever in this case. You had every opportunity to get this trade pretty much with no loss. And so that's kind of what the worst case scenario is in using our currency indexes. And what's nice about this is they also work on any time frame you want. For example, here's the pound dollar, and I just have by default 5 minutes on here, but you can put any time frame you want in here. Let's say 1 minute. You can analyze the swings and the trend on a 1 minute chart. Now forget about the perfect oscillator. I've never really spent much time using that, but you can clearly see swings on a 1 minute basis. So let's put 1 minute on the dollar up here as well. And let's scroll these back. And you really can kind of get a feel for, and I have some of these tools only go back so many bars on a 1 minute basis. Remember, every hour is 60 bars back. So these were designed mostly for longer term trading. But that's why it disappears at that point. If you go back and you look at this and you see kind of just a choppy trade in the dollar, it's in a very tight range, and price breaks out above the high. That's a sign of strength. You know, it was from 4 to 8 in a very tight range. Breaks out. Typically, you're going to want to buy the pullback, which is, you know, right here, and you can put your stop right underneath this low and risk just a ridiculously tiny amount. This is the dollar. And so all the dollar pairs are just kind of going up and down, up and down. Finally, the dollar strong pulls back into the range. You know, whether you got in here or when it starts going back up again to be a little bit safer, sometime a little bit before 8, it's very likely to go up. Now, the pound has been trending down. Whoops, I meant to have a trend line on here. Pound has been trending down. It's in a little range, but it's clearly trending down. And right before 8, it pulls back up to a resistance area, 15-minute moving average, hourly moving average, point of control. The pound is very likely at 8 o'clock to go down. Dollar is very likely to go up because it just broke out and a little bit of a pullback. So whether if you're a longer term trader, you can use hourly currency indexes or 30 minutes. If you're a regular trader, you can use 5 minutes or 10 minutes. If you're a scalper, you can use 1 minute charts. And so at 8 o'clock, you're very likely to get a very high probability pound dollar sell. Now, let's not look at a 5 minute chart on here. Let's look at a 1 minute chart, just like our currency indexes, and we'll go back to 8 o'clock on here and show you how you can, you know, find high probability scalp trades. You know, coming up to 8, we're looking to sell this. You go short. Notice 55.60. You're short. Your stop is 5 pips. You know, it falls quickly, 10 or 12 pips. You're out. You're never going to catch every single pip, but let's say you made 7 pips here. Pulls back up again. You get short now with about a 4 or 5 pip stop. Comes down. You're out right here. You know, look at the profits versus the risk. You know, tiny risk, bigger profit. You can use that on, you know, like I said, any time frame you want.